You know, if you're an investor in the pharma space, AstraZeneca is one of the most fascinating and maybe stressful stories on the market right now. It's a story of incredible success, huge ambition, and really a high-stakes balancing act with billions of dollars on a line. Okay, let's get right into it.
And no, that's not some hypothetical business school question. That is the single biggest challenge staring AstraZeneca right in the face. Right now, their absolute blockbuster drug, Farxiga, brought in nearly $8 billion last year, and it's about to lose its patent protection. And believe me, that's just the tip of the iceberg.
So, you've got to ask, how did they even get here? And more importantly for us as investors, what's the game plan to not just survive this, but to actually come out bigger and stronger on the other side? We're going to break down the bull case, the bear case, and then the bottom line.
All right, let's start with the good news. Let's talk about why so many people are optimistic about this company. Because despite all those headwinds we just mentioned, AstraZeneca has built an incredibly powerful growth engine, and right now it is absolutely firing on all cylinders. The first thing that just jumps out at you here is how much one single division dominates the picture. Oncology, that's their cancer drug division, makes up a whopping 43% of the company's entire revenue. So this isn't some super diversified portfolio. This is a focused powerhouse. And get this, it's growing at a blistering 18%.
And these are the heavy hitters, the star players driving all that growth. This is a lineup of blockbuster drugs that have really become the standard of care in their fields. But pay special attention to that last one, Enhertu. It's a revolutionary technology called an antibody-drug conjugate, an ADC. Think of it like a guided missile that delivers chemo directly to cancer cells. And you need to understand, AstraZeneca is right at the bleeding edge of this tech.
And all of this momentum leads to, well, this number, $80 billion. This is management's big, public, and really audacious goal for annual revenue by the year 2030. To give you some perspective, that's almost a 50% jump from where they are today. This isn't just a growth target, it's a massive statement of confidence.
Okay, so how on earth are they going to get there? Well, their strategy is actually crystal clear. It's built on four main pillars. First off, keep dominating in oncology, their cash cow. Second, build up new pillars, like the rare disease business they got when they bought Alexion. Third, keep investing heavily in the next wave of technology, like ADCs. And finally, the big one, launch 2020 new medicines before this decade is over.
And look, that goal of 20 new drugs, it's not just some fantasy, it's not just wishful thinking. It is backed by this just incredible number. With 196 projects currently in development, their R&D pipeline is legitimately one of the most powerful and productive in the entire industry. This is the engine they're betting on to carry them to that $80 billion target.
So, you hear all that, and it sounds amazing, right? A compelling story of incredible growth, of ambition. But, as any smart investor knows, there's always a flip side. And the risks here are every bit as significant as the potential rewards.
So now we have to turn the coin over and look at the other side. The bear case for AstraZeneca isn't about a company that's failing. No, it's about a wildly successful company that's in a desperate race against a ticking clock.
And that ticking clock has a name. It's called the patent cliff, and it is the single biggest boogeyman in this entire industry. It's that moment when a company loses its exclusive rights to sell a drug, and cheap generics just flood the market. For a drug that's a blockbuster, this means you literally watch billions in revenue just vanish, almost overnight. And for AstraZeneca, the scale of this problem, it's just staggering. I mean, just look at these numbers. Starting next year, in 2025, Farxiga and Soliris, which together represent over $10 billion in sales, they lose their protection. Then, just 2 years after that, Lynparza follows. We're talking about a gigantic hole in their revenue that has to be filled, and it has to be filled fast.
But wait, it gets worse. The patent cliff isn't the only storm cloud on the horizon. Here in the US, the Inflation Reduction Act now lets the government negotiate drug prices directly, which is putting a huge squeeze on profits. Then you have China, which is 13% of their sales, where the company is facing ongoing government investigations. You put all this together and you get to one unavoidable conclusion: that ambitious plan of theirs, it has to be executed flawlessly. There is zero room for error.
And this chart really drives home just how concentrated that risk is. Look at that. 43% of all their money comes from the US, where that Inflation Reduction Act is creating major pricing pressure. Another 13% comes from China, where those geopolitical and regulatory risks are getting bigger. The very places that were once these huge engines for growth, well, now they're also sources of some pretty major uncertainty.
Okay, so we've got the bull case, amazing growth, right? And the bear case, this huge, looming risk. So what does this all mean for you, for an investor looking at the stock today? Well, it all boils down to that classic dilemma, price versus potential.
So the very first thing you're going to notice as an investor is the price tag. AstraZeneca's price-to-earnings ratio is sitting around 30. That's more than double what you'd pay for its peers, like Pfizer or Merck. What that tells you is the market has already baked in a ton of success. You are paying a very significant premium to own this growth story.
But here's the fascinating twist. While it looks really expensive next to its peers, some other valuation models tell a completely different story. A discounted cash flow analysis, which tries to figure out a company's true intrinsic value, suggests the stock could actually be undervalued. But, and this is a huge but, that's entirely contingent on them pulling off that Ambition 2030 plan perfectly.
And this, right here, this is the core tension. This is the whole ballgame for anyone thinking about buying this stock. On one hand, you have a company with an incredible track record and a clear path to industry-leading growth. But on the other hand, you have to pay a premium price for it, and you have to accept the very real risk that they could stumble as they try to navigate this massive patent cliff.
So at the end of the day, it really all boils down to this. Investing in AstraZeneca today isn't just buying a company. It's making a bet on flawless execution. It's a bet that their world-class R&D pipeline can outrun their patent expirations. And for every investor, that leaves one final, provocative question you have to answer for yourself. Is the view from the high wire worth the risk of the fall?